Hello everyone, my name is Isaac. Welcome to my channel, Guardians for Zion. As a member of the Church of Jesus Christ of Latter-day Saints, I have noticed a rise in critical content from people who still claim faith in the church. Much of this content approaches controversial doctrines in an alternative way by reinterpreting or reframing long-established teachings and historical records that have guided the saints since the church's restoration in 1830. Now, critical thinking is good and is, in fact, essential. Um, and we're encouraged to study and seek understanding. And a lot of us are so rigid in our beliefs that we aren't willing to see alternative opinions or even be willing to change our own ideas. And true study requires context and also humility. And one of those doctrines that have been reinterpreted lately is the law of tithing. Now, recently, some content creators or influencers have been promoting a new interpretation. They have three central claims about what tithing should look like by a truly inspired church, and I will address these claims in a series of videos. The first claim is that tithing in its original definition as revealed through Joseph Smith in the Law of the Tithe, section 119 of the Doctrine and Covenants, is only 10% of what remains after covering essential household expenses. And this is what they call a surplus after basic household necessities are met, and not income as clarified by more recent leaders of the church. The second claim that they hold is that Scripture declares tithing to be voluntary, or how they use voluntary is optional, and tithing the poor amongst the saints is unjust and incompatible with Zion's vision. Thirdly, their claim is that placing emphasis on tithing prioritizes the accumulation of wealth in ways that are seen inconsistent with spiritual purposes of tithing and raises questions concerning priesthood leadership. And each of these claims to a lay member of the church can sound pretty convincing. And I want to look at what the scriptures say, the historical record teaches about tithing, and also why the modern church's official position remains consistent with ancient and modern scripture, and also explain where there is room for discussion. Now, claim number one is that tithing is 10% of one's surplus after essential household expenses are deducted. Now, this first claim gives the suggestion that the institution of the Church of Jesus Christ of Latter-day Saints has been drifting from the correct interpretation of tithing since Joseph Smith revealed it. And some take it further to imply that we are being tricked by the authorities of the church to maximize the income or revenue of the church. They claim that historically 1/10 of all the interest annually, correctly interpreted, means 1/10 of surplus annually, and surplus meaning excess beyond subsistence, and subsistent means means of supporting life. They assert that the 1970 First Presidency statement, which I will read shortly, represents a shift away from the original surplus-based meaning of interest towards an income-based interpretation. And by income, they mean either gross or net salary. They claim that by defining interest as surplus, the poor are better protected from financial struggles. If you have an income but not a surplus, you do not need to tithe. and a tithe on surplus won't put a household at risk of financial burden as much as a tithe would on income. Now, this surplus-only view of calculating tithing is based on a genuine sympathy and compassion of those who are barely managing to increase their personal and household financial capacity. And especially in the midst of the current global cost of living crisis, this is a conversation that many have thought revisiting, as well as myself. Underlying this claim is an assumption that the historical concern for subsistence made by some leaders must function as a binding interpretive rule today. In other words, they argue that because early Latter-day Saints lived in agrarian subsistence-based economy, the language of interest and surplus must permanently exclude anything required for basic living, such as deducting essential living costs, regardless of economic structure, prophetic clarification, or later administrative statements. So just to give a bit of context as we understand the context around the section 119 of the Doctrine and Covenants, which is the law of the tithe, and define key terms and identify the anomalies in teachings from early church leaders, we may be able to understand the correct way to interpret or what the scripture meant. So here's the scripture in question. And after that, all those who have thus been tithed shall pay 1/10 of all their interest annually, and this shall be a standing law unto them forever, for my holy priesthood, saith the Lord. Verily I say unto you, it shall come to pass that all those who gather unto the land of Zion shall be tithed of their surplus properties, and shall observe this law, or they shall be not found worthy to abide among you. Here is the first presidency statement in 1970, which is an interpretation of what interest annually means. And as mentioned before, critics' claim to this is that it replaces definitions of interest with income. They say inquiries are received at the office of the First Presidency from time to time from officers and members of the church asking for information as to what is considered a proper tithe. For your guidance in this matter, please be advised that we have uniformly replied, and the simplest statement we know of is that the statement of the Lord himself, namely that members of the church should pay 1/10 of all the interest annually, which is understood to mean income. No one is justified in making any other statement than this. And then they add this: we feel that every member of the church is entitled to make his own decision as to what he thinks he owes the Lord and make payment accordingly. Why would the First Presidency change the definition of interest to income in order to maximize church revenue, and then add the last sentence that every member should make a personal decisions of what he feels he owes? Wouldn't you expect them to use verbiage from section 119 that says that they observe this law, or they shall not be found worthy to abide among you? If they were trying to maximize revenue and be using fear tactics to increase revenue, well, they haven't here. If revenue maximization were the goal, this wording chosen in this official statement is unusually weak and decentralized. Now, there are many monetary terms thrown around in this conversation, and using different words for different things can cloud the truth, because when we say one thing, we could mean something else. So let's go through it and let's have a look at definitions and see if they fit the Revelation and the First Presidency Statement. We'll use the 1828 Noah Webster's dictionary. This dictionary is contemporary to when Joseph Smith was alive and when he was just before he was translating the Book of Mormon from the ancient language into English. And we will also use modern definitions to see if the terms have stayed the same. The reason to use the 1828 dictionary is that the revelation is given in language that people already use, or already used at that time that this revelation was given. So words must be understood in their proper context of time. Otherwise, we're using presentism for our argument. So the definition of interest in the context of the Doctrine and Covenants, section 119. Interest is defined with several relevant meanings to the noun of the word. Interest, definition 1, regard to private profit. So what is private profit? It is individual profit. Profit is the advance in the price of goods sold beyond the cost of purchase, or gain made by selling goods at an advanced price, or a price being beyond what the cost the seller and beyond all costs and charges. So that's the definition of profit. Interest is profit. Another definition that could apply is the premium paid for the use of money. That's like your bank interest. You get a flat rate of interest when you put it in a term deposit. And the third definition that could apply is any surplus advantage. And what does surplus advantage mean? In 1828, surplus meant overplus, that which remains when use is satisfied. An advantage is a benefit, gain, or profit, or interest, increase, or overplus. So, yes, interest, surplus, advantage, profit, gain, all weave together nicely in those definitions. So those with this claim promote the claim that we're talking about, that tithing should be on surplus after all necessities are taken care of. They promote this third definition to interpret tithing and none of the other definitions. But where in the definition that I just read, that it is surplus advantage, do we find that it is specifically meaning that it is after essential household costs are satisfied? What is the use? So the surplus is that which remains when use is satisfied. What is the use that you are satisfying? It's not clearly defined in that definition at all. So it could mean after essential household costs are satisfied, or it could mean after referring to a business that after the costs of running that business is satisfied, that is the profit, and that is the surplus. So the 1828 definition of income now. So we've defined interest, we're defining income now, which is what they have a problem with, changing the definition from interest to income. Income in 1828 is a gain, profit, which proceeds from labor, business, or property of any kind, the produce of a farm, the rents of houses, the proceeds of professional business, the profits of commerce or of occupation, the interest of money or stocks and funds, income is often used synonymously with revenue in this 1828 definition, but income is more generally applied to the gain of private persons, or in other words, private profit. So we see that the definitions of interest and income in 1828 align pretty well. So that's with all three definitions of interest. This definition of income covers all three. They do overlap substantially, and they're not two completely different concepts. So in the modern dictionary, what do these words mean? It's been almost 200 years since the Noah Webster's inspired dictionary. So what are we referring to as interest or income in the modern dictionary? So interest, according to the Merriam-Webster dictionary, has some relevant meanings to this context. One is an advantage, which we've defined in 1828, which is benefit. Advantage also meaning gain. The second definition has a few sub-definitions. A charge for borrowed money, generally a percentage of the borrowed amount. And the profit in goods or money that is made on invested capital. And profit also meaning gain or net income. So that's where that word income comes into our modern definition. Or it is an excess above what is due or expected. Now, the definition of income in the modern dictionaries is first a gain or recurrent benefit, usually measured in money, that derives from capital or labor. Or the second definition, the second definition is a coming in. So if you have an income, it is incoming, it is a coming in. In monetary terms, that would probably be revenue, which again is covered in the 1828 definition of income. So still, even with 200 years of drift in language, these dictionaries, the definitions have survived almost completely with slight variations. Interest and income has definitions that both mean gain or profit in both the 1828 and the 2000s era definitions, but the word surplus was not used in the modern dictionary that I've used. It's probably somewhere in another dictionary. But let's look at what surplus means in the 2000s. The surplus means the amount that remains when use or need is satisfied. It matches exactly with 1828. Or an excess of receipts over disbursements. Again, it's pretty much exactly matching. Where does it define what this use is that is being satisfied? What are the disbursements for? And the subsistence-based restriction for tithing is not present in the definitions themselves. And so definitionally, interest can mean income, and it also means surplus. And this weakens the claim that they say most modern leaders have introduced a foreign definition to insert the blank, whether they were ignorant of it or they are deceiving people. It weakens that claim. Now, if we go to Investopedia, which is a website that has articles on different business terms and concepts, let's go to what they define as income. Income is earnings left after all expenses and non-revenue. Additional income are deducted. So let me say that again. Income is earnings left after all expenses and non-revenue, and additional income are deducted. It's more commonly referred to as net income because it is the net result after these deductions. Income can be broken up into several different categories. There are three main ones. Gross income. In business terms, gross income is the total recorded before any taxes and expenses are deducted. Gross income also refers to the gross profit or gross margin. And the revenue, it is the revenue after the cost of the goods that are being sold are deducted. And gross income to an individual is their total earnings before taxes or other deductions are taken out. It also includes income from all sources, not just from employment, like your wage or your salary from working. Your net income is another category of income. In business, the net income is calculated by subtracting all the legally deducted costs of doing business, such as depreciation, interest, taxes, and other expenses from revenue. The result of taking those deductions off is the net income, or the net profit. It's also called the net surplus, depending where you live in the world. Net income to an individual is the income left over after being taxed. Not necessarily what's received in the hand. For example, my net income, I sacrifice some of my income to go to investment for my retirement. So my net income is whatever I receive in hand plus the funds I sacrifice to retirement, or reversing that, it's whatever money that I have been given in wages and then whatever the result is after taking off tax or any other deductible expense as well. The third term that's usually that can mean income is discretionary income, and this is the income available to the household after necessary expenses like housing, food, and taxes have been paid. This is the definition that the critics use, that we're trying to address their claims in this video, that tithing is only on surplus after necessities are taken care of. This is discretionary income. So that takes care of the definitions. It doesn't necessarily mean discretionary income or surplus after necessities are taken care of. And it doesn't necessarily mean gross income or net income. It can mean a variety. However it is to be interpreted at the time. So let's look at the time that it's being interpreted in. Net income is what is referred to as income by secular dictionaries, but people can still be mistaken by definitions very easily, as has been the case here. In 1830s church history, did the saints understand interest to be income or to be something else? Now that's a lot harder to determine, and it's actually the strongest argument in favor of the surplus after necessities tithing model. Most of the saints in the 1830s would have been familiar with the Bible teachings on tithing, Leviticus 27:32, and concerning the tithe of the herd or of the flock or even whatsoever passeth under the rod, the tenth, shall be holy unto the Lord. So that's where the 10% comes from. Tithe means tenth. Deuteronomy 14, 28 to 29 has the phrase, thou shalt bring forth all the tithe of thine increase. Now, what does that mean by increase? Is this just another term to refer to as profits or surpluses? Now, the Israelites live mostly in an agrarian economy, which is an agriculture economy. These households didn't really have a paycheck. Like, they didn't have, most of them probably didn't have much gold to buy or sell with. And there was no grocery bill because the household produced or traded the food that they were to look after their families. They lived off the produce of the land. So the yield of the field or the vine or the flocks, the herds, in excess of what had been used for production was tithed on. So increase also means surplus. Let's have a look. Increase in Noah Webster's 1828 dictionary says increment, profit, interest, that which is added to the original stock, or produce as of land. Now this aligns with the 1828 dictionary for terms of interest as well as profit or gain. Now there are several quotes which show the level of understanding or the interpretation that certain leaders have made about what is an honest, faithful tithe. Now, it's important to understand that tithing originally didn't always mean 10% to the early church leaders. According to the Gospel Topics article on tithing in the Revelations and Context chapter on tithing found in the Gospel Library of the church, before 1838, the term tithe used by leaders referred to any voluntary offering, regardless of the amount or percentage it was. In 1831, a revelation on consecration and stewardship instructed the saints to donate of their surplus. This included land, tools, furniture, and cash, and the term tithing was used in this revelation, applying to voluntary donations rather than a set percentage. So how did the saints tithe during this time? In 1837, Bishop Edward Partridge, who was the bishop of the storehouse, I believe it was in Kirtland, he was in charge of administering the tithes and offerings in the storehouse along with his councillors, and him and his councillors, agreed on a voluntary system of tithing that was set at the rate of 2% of net worth. So this calculation of net worth is based on what one owed minus what they owed, or in accounting terms, assets minus liabilities. And that was multiplied by 2%, and that was what they gave as a tithe or an offering to support the church mission. Now, there was a good article I came across from a website called Mormonism Explained, which I found insightful to understand how they would have thought about income back in this time. The overall economy of this time period operated very differently from the economy today. The early church was largely an agrarian economy, meaning that the income of most people was defined by farming. Persons either wanted a farm, worked on a farm, or already owned a farm. And in the 19th century, the concept of annual incomes or salaries was very different. Few received a regular paycheck like in today's economy. A person might earn wages for a period of time, or they might devote time to a particular project or serve their communities as a school teacher and receive payment in whatever form for their work. Annual incomes were not perceived in the way that we view it today, perhaps because there was no such thing as an annual income tax. That wasn't introduced till later in the century, I believe, in America. In this environment, it was more likely that heads of households thought in terms of net worth as a basis for tithes and donations, calculating the total land value of lands, acres set aside for farming, farming tools, animals, clothing, furniture, and other personal property. The United States was primarily a cashless society until the second half of the 1800s. Gold and silver coins were rare. Transactions relied largely upon a barter system. Even if someone was in the employ of someone else, compensation for labor was generally not satisfied by cash, money, or gold, as I mentioned before. Instead, terms might be that someone received extra apples from the harvest, which the receiver might then trade to someone else for other goods or services or monetary compensation. A farmer might be paid in crops or other goods. The store employee might be paid in goods rather than receiving a paycheck. Only rarely was a person compensated for their labor by cash or coinage. This meant that church members in the early church would have been more inclined to think about tithing in terms of overall net worth rather than an annual income. After the revelation on tithing was given in 1838, the early bishop, Bishop Partridge, interpreted it again as 10% of one's net worth if they invested their net worth for a year at the common interest rate of 6%. So essentially, this reduced the tithing that they had been giving in 1837 from 2% of net worth down to a 0.6% of net worth. Clearly, there was no rigid tithe in the church during the time of Joseph Smith. It was voluntary, and bishops' best guess or even inspiration on how to raise it was voluntary and the bishop's best guess on how to raise revenue for the church. Perhaps the bishop was receiving inspiration or revelation to know what policy would best fulfill this law or commandment that had been given. And this shows that even when percentages were used, the calculation had to be pragmatic, not designed to enforce gross income or a subsistence-based or surplus after expenses based interpretation to enforce a narrow definition of tithing. And this way of thinking about tithing back in the agrarian economy actually makes sense as being on the net worth in a lot of ways, but it can't actually be used as an authoritative interpretation because Bishop Partridge is not equal in priesthood authority to the prophet, First Presidency, or even the Quorum of the 12. I believe that Bishop Partridge is merely using his keys as a bishop to interpret to the best of his knowledge and ability that would be acceptable as a tithe. And Partridge's method does align with definitions of surplus, gain or increase, but applied predominantly to capital rather than cash. So it was surplus of any increase of your capital rather than cash, because they didn't live in a cash society. And how do you even calculate what your increase is if you've been paid in like meat and then barter it for bread and then barter that with apples, and you can see how confusing that could be. So it was on their best guess, and the most pragmatic way would have been to do it on their net worth, which is a type of net income. How do the critics of that use the very narrow definition of surplus after necessities are taken care of for tithing? How do they derive this interpretation from these historical events and statements? John E. Page was a former member of the Quorum of the 12 Apostles. He resigned in 1846 from the Quorum and I believe from the church due to his resentment that he was sent to collect tithing from all families, including the poor. He gave a statement on record to a Strangite High Council, and the Strangites were a break of church from the Church of Jesus Christ of Latter-day Saints when the succession crisis happened, when Joseph Smith was murdered. And Page said that he believed that many paid tithing, and in consequence of this were in want of money enough to procure miscellaneous necessities of life. And another quote that they like to use is in 1847. Orson Hyde is noted to recount a system of tithing that he claims he learned from Joseph Smith. He says the celestial law requires 1/10 part of all a man's substance, which he possesses at the time he comes into the church, and 1/10 of his annual increase ever after. It is, if it requires all a man can earn to support himself and the family, he is not tithed at all. The celestial law does not take the mother's and children's bread, neither aught else which they need for comfort. These quotes put against each other actually weaken the argument. John Page is actually acknowledging that tithing was required of the poor, and tithing the poor did in fact create a gap for necessities. But this was more of a personal complaint. Hyde is saying that, and Orson Hyde in the other quote is saying that tithing was not required of the poor to only provide bread, but also provide comfort. Now, standards of comfort from 1840 frontier America and standards of comfort now are very completely different. So when they say it is only on surplus, tithing is only on surplus after necessities, what do they mean by necessities? Because I could say power is a necessity now. I could say insurance is a necessity. They didn't have either of those back in the 1840s America. So, like, what are you saying is reasonable to deduct from your tithing? Orson Hyde expressed concern that tithing should not deprive families of basic sustenance, and read in its 1840s agrarian context, his statements show his understanding of increase and interest as produce or gain beyond what is necessary for survival, and not modern accounting concept of discretionary income for household budgets. Perhaps the argument using contrarian contextual understanding could translate in today's world to things necessary for survival being food and water and basic clothing, maybe housing. Anything extra than this is just a modern convenience. He says he learned this from Joseph Smith, which makes it a second-hand account. Again, this is after Joseph Smith has died, so Joseph Smith can't defend this report. And I haven't found any first-hand evidence that Joseph Smith narrowed the interpretation this way. And because this language doesn't clearly map onto a wage economy and was not repeated, quoted, or codified by presiding leaders, it should probably be treated as a personal interpretation of Orson Hyde's, or a teaching like a guidance rather than a binding definition. Yeah. Other scriptures and statements they use to back up these claims of that tithing is surplus after essential costs is just their interpretation read into the texts, especially in Joseph Smith's translation of Genesis, and a quote from Lorenzo Snow, President Lorenzo Snow. And this practice of reading and interpretation back into the text is called eisegesis, which is a fallacy. So let's have a look at these supposed quotes or scriptures that are backing up their claim, this narrow claim. Between 1830 and 1833, Joseph Smith completed his inspired translation on the Bible, including the book of Genesis, and in doing so, Joseph Smith added 15 verses to Genesis chapter 14, which expanded the background on the person of Melchizedek. And notably, verse 39 introduces more detail to the principle of tithing that Abraham followed. And we know he followed this principle of tithing from not just the Old Testament record, but also the New Testament and the Book of Mormon. And this is what it says. Abram gave unto him tithes of all he had, and all the riches which he possessed, which God had given him, more than which he had need. Now the phrase, that last part of that verse, the phrase more than which he had need, is what they read in, well, more than which he has need means after his basic household needs are met, thus excluding necessities as part of the calculation for tithing. Again, this interpretation lacks direct support from the text itself, and quotes made by Joseph Smith. There's nothing to support this specific verse saying this. In context of this moment, Abraham gave tithes to Melchizedek right after his victory in war, where he freed his nephew Lot and collected spoils from battle. In Genesis chapter 14, verse 20, Joseph Smith translation, the revelation clarifies, and Abram gave tithes of all he had taken. Now, this is in the Gospel Library version, and it's not every revision, and not every revision by Joseph Smith has been, because not every revision of Joseph Smith made to the Bible has been put into our Gospel Library footnotes yet, though we do have the manuscripts now. Another possible interpretation of more than which he had need refers to costs incurred for managing the supply and supplying his men in battle. So verses 14 through 24 before this verse 39 could indicate that this is the case. It mentions that the young men that went into battle with him were consuming some of the spoils. In other words, this could represent a business expense for maintaining the army, and after accounting for those expenses, Abraham tithed on the rest. So more than which he had need was more than which he had need for his army, for sustaining his army. But this isn't clarified either. So I just wanted to point out that this isn't a smoking gun that the critics should be using. And this isn't one that we should be using either to say, well, no, it's the opposite. And there is no smoking gun of what type of income you should tithe on. So another quote that they use and use eisegesis for is Lorenzo Snow's quote. He says, "I plead with you in the name of the Lord, and I pray that every man, woman, and child who has means shall pay 1/10 of their income as a tithing." And this is found in the conference report, October 1899. And if you want to go look it up, it's page 28 of that conference report. Who has means is asserted by critics to mean who has the ability to pay, after necessities are taken care of. It is interesting to note that in the general handbooks, it shortens this quote and it drops who has means. And some critics say that this was because church leaders didn't want people to stop paying, even if they didn't have enough for their families, because they feared that this would exclude everyone, well, most people, from paying tithes. Now, this, again, they're reading their interpretation of tithing into this. And if they're being consistent, they would define the word means with the 1828 dictionary, as they love to do. But conveniently, they leave this out. Now, means as a plural noun is defined as income, revenue, resources, substance, or estate considered as the instrument of effecting any purpose. So whoever writes the handbooks just removed who has means, because Lorenzo Snow just said the same thing twice in one sentence. Every man, woman, and child who has income shall pay 1/10 of their income as a tithing. Shortened, it means every man and woman who shall pay 1/10 of their income as a tithe. He also says on page 27 of the conference report that no one can keep this law, the law of tithing, wholly unless he give a conscientious tithe. He does not clarify that conscientious tithe means surplus after expenses paid for. Now, the strongest quote that is used by critics to support this claim is by Franklin Richards, Elder Franklin Richards, who was an apostle at the time of this discourse. It's in the Journal of Discourses, if you want to go look it up. And it says, "Before going further, I want to stop and consider the question asked by some, what he means when the Lord requires the surplus property of his people as the beginning of their tithe. Let us consider for a moment this word surplus. What does it mean when applied to a man and his property? Surplus cannot mean that which is indispensably necessary for any given purpose, but what remains after supplying what is needed for that purpose. It is not the first and most necessary use of a man's property that he feed, clothe, and provide a home for himself and family. This appears to be the great leading objects for which we labor to acquire means, and as until the time that this revelation was given, all public works and raising of all public funds had been by consecration, was not surplus property, that which was over and above the comfortable and necessary subsistence. in the light of what had transpired and of subsequent events, what else could it mean? Can we take any further view of it than when we consider circumstances under which it was given in Far West in July 1838? I have been unable in studying this subject to find any other definition on the term surplus as used in this revelation than the one I have just given. I find that it was understood and recorded by the bishops and people in those days, as well as the prophet Joseph Smith himself, who was unquestionably the ablest and most exponent of this revelation. Now, how much of this is him reasoning, and how much of this is the authoritative claim of the church? This is also given in 1882, which is 40 years after Joseph Smith is dead, almost. Again, a second-hand account, and there's no first hands of Joseph Smith clarifying that this is what surplus means, or meant to him. We have defined surplus as gain or income, that which remains after use is satisfied. And yes, I think in an agrarian economy, a surplus was after basic subsistence. So again, this is probably their strongest quote that they can use to narrow this interpretation of tithing down. Now, there's some important facts to clarify of what Elder Richards is talking about. He's talking about the first part of tithing, the revelation on tithing. Verily, thus saith the Lord, I require all the surplus properties to be put into the hands of the bishop of my church, and this shall be the beginning of the tithe of my people. In history, the 1838 revelation on tithing, there was the first part, which was all the surplus properties were required to be consecrated to the church as the beginning of the tithe of his people. Later, it was liberalized, so it was changed to be 10% of one's surplus properties when they joined the church, and then 10% of their increase annually after that. And then since then, somewhere along the line that's dropped off completely, and we're just paying interest on our paying tithing on our income, without that first part paying a tenth of our income when we join the church, a tenth of our surplus properties, like our assets, when we join the church. So going back to the quote, Elder Richards, he correctly defines surplus in this context, that the initial tithe was on surplus property or assets beyond their subsistence. But the second part of the law of tithing, pay 1/10 of all the interest annually, is not actually directly addressed by Elder Richards at all in this quote. He doesn't address or define the word interest, but that doesn't mean that this isn't also how he understood interest. Remember, interest also means surplus. So while his explanation reflects concern in historic reasoning, it was never actually canonized or adopted as a universal definition of tithing by presiding authorities. And later leaders such as Lorenzo Snow emphasized 1/10 of income as the practical standard of tithing. So the most logical conclusion I can come to with just looking at the definitionally correct terms in its context, and in a modern application of this context, is that tithing is a personal decision. Well, tithing on what type of income you tithe on is a personal decision, and you're accountable to God for that decision. And the clearest, most balanced, authoritative quote from earlier church leaders is from Joseph F. Smith, made in April 1899 conference, and it is one that I hold and reflect myself and my own beliefs around tithing, and is captured in the 1970 First Presidency message. Every man is left to be his own judge to what he calls his tithing, and there is a great variety of opinion as to what is considered a tithe. A man who works for wages and devotes his whole time to the service of his employer and receives $1,000 or $2,000 a year for his salary, it is a matter for him to tell how much he owes for tithing. And then President Joseph F. Smith says, if I earned $2,000 a year, I should know that my tithing is just 1/10 of that. And I would not take out what it had cost me to feed and clothe myself and to pay all the expenses necessary to the maintenance of my family before I reckoned with the Lord as to what belonged with him. $200 would be my honest tithing, would it not? That is the way I look at it. That's President Joseph F. Smith. And then he says, then if a farmer raises 2,000 bushels of wheat as a result of his year's labor, how many bushels shall he pay for tithing? Well, some people will go straightway to dickering with the Lord. They will say they hired a man so-and-so and his wages must be taken out, that they had to pay such and such expenses and this cost and that cost, and they reckon out of all expenses and tithe balance. If a man earns $1,000 and it costs him $600 to live, he pays tithing on the remaining $400. He considers that his net income, and he reckons with the Lord on that basis, while a great many Latter-day Saints reckon with God in just this way. Now you are at liberty to do as you please in this matter, and I think that's the perfect way to sum it up, but I'll keep going. You can choose whichever course you wish, but let me say to you that as we measure out, so will it be measured back unto us. When we go dickering around with the Lord, probably he will dicker around with us. And if he dicker with us, and if he undertakes to do so, we shall get the worst of it. I think we had better be honest with the Lord and deal justly and liberally with him. For as it is said in the scriptures, the liberal man deviseth liberal things, and by his liberality shall he stand. My experience in my childhood is that when the widow paid 1/10 of every bushel of potatoes, of wheat, of barley, of oats, of barley, when she paid the 10th chicken or egg or 10th calf or colt, the 10th pound of beef or pork, when she did this, she was blessed, and I know it. God opened up her way and multiplied blessings upon her, and though a widow, driven into the wilderness with a large family and without means to take care of them, she never had to ask or receive help from the church to feed or clothe her or her children. The Lord provided for her because she put her trust in him, and she was obedient to this law. I am a witness of that, and the Lord will provide for other widows in the same way. He will provide for all his people according as they put their trust in him and are faithful and obedient. Obedience is better than sacrifice, and to hearken than the fat of rams. It is the heart and the willing mind that the Lord requires of his people, and not so much their substance. He does not need our obedience, but we need to be obedient, for it is through obedience that we will receive the reward. That's his quote. Tithing is the law of God, intended to be observed honestly and conscientiously by all members that have an income. Now, President Smith acknowledges that members may differ in how they decide to calculate their tithing, and he is okay with that, it seems like, without restricting tithing to any narrower definition, such as surplus after necessities or even gross income. Now, President Smith, it sounds like President Smith tithed on gross income or even revenue, and however, he rationalizes and concluded to himself that his tithe was, it was on either gross or even revenue, as a matter of personal faithfulness in the Lord and his promises. Now, Joseph F. Smith's teaching in this quote, what he said authoritatively and not speculatively, aligns with the 1970 First Presidency message, in which they determined that tithing is 1/10 of all their interest annually, understood to mean income. Now, this definition is consistent with both 19th century practices and modern applications, and it avoids the pitfalls of narrowly defining and interpreting tithing on what remains after household subsistence or even on gross income. The collective historical record and scriptural terms and phrases converge on a single reasonable conclusion, and this is the one I've already shared, and I'll just wrap up, as tithing is a commandment binding on all members, calculated as 1/10 of income or gain, without restricting it solely to what remains after essential expenses. Interpretations that insist tithing should come only from discretionary or surplus funds reflect personal opinion or proof texting rather than canonical and authoritative guidance. Now, that's to say, discretionary or surplus funds alone, only, is not canonical and not authoritative guidance. So please don't be tricked into trying to convince everyone to tithe this way. This is a personal preference of how to tithe. Now, a family with different means, different income levels, or poverty levels, or wealth levels, will have different ways to different things to think about when they come to this question of how they tithe. So if you felt confused by my conclusion after I took apart many of the methods used to support the claims of this narrower reinterpretation, I want you to know that my intention was to have the most rational argument with everything that is in its proper context, and these definitions and quotes can support each other. I've been talking for too long. There are many quotes and talks given since Joseph F. Smith that say that tithing is actually on gross income. Now, these talks may be common, the conclusion from these talks may have resulted in a common practice amongst the members of the church. None of them are justified in making this claim authoritatively, though, even if some of these were in general conference, because the 1970 First Presidency statement is still the position of the church, that it is on your interest or income annually, and that it is up to every member to decide what he or she thinks that they owe the Lord. So my question to whoever's listening, no matter how small my audience is, how do you determine what your type of income is to tithe on? Do you tithe on gross, net, or discretionary? And I think the better question is, what type of income does the Lord want you to tithe on? And how do you know what the Lord wants you to tithe on? I think as we study, and in this case, maybe draw up a budget, compare the different outcomes, and then make room enough for faith. Then you pray. And if by the power of the Holy Ghost, the Lord tells you to tithe on gross income, have the faith to do it and watch the blessings flow in. If he tells you to tithe on your net income, have faith to do it and watch the blessings flow in. And if he tells you to tithe on your discretionary income, figure out what that means in your situation and have faith for miracles and watch the blessings flow in. Tithing is a law of God meant for the benefit of his children, intended to be observed honestly by everyone. What I hope to address in our next video is the moral and doctrinal precedent for tithing everyone, including the poor, and examine if the purposes of this law direct us to one of these specific interpretations of income, or if there's more understanding that needs to be had about the principle of faith, sacrifice, and how that relates to tithing. I hope you all enjoyed. Hopefully I've gotten you to think about a few things. I've probably gotten a few things wrong. It's 11:30 at night, New Year's Eve, when I'm recording this. Stay vigilant. Move Zion forward boldly. And I'll see you next time. Thank you. Goodbye.